Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 9th of December. ECB decides smaller asset purchases but for longer. At its final gathering for 2016, the ECB turned interesting an otherwise quiet day as far as economic events are concerned. Yesterday, the European Central Bank kept all its three interest rates unchanged, but decided to slim down its monthly purchases to 60 billion euros from 80 billion euros previously, starting in April 2017. The purchases will continue until the end of December 2017 or beyond if necessary. Although this is a 9-month extension of the QE program, the reduction in the size of monthly purchases was initially interpreted by investors as QE tapering, and as a result they pushed the euro higher. Euro-dollar emerged above the 1.08 obstacle on that. However, as they continued digging into the statement, they found out that the Governing Council is willing to increase the program in terms of size and/or duration if the outlook becomes less favorable or if financial conditions become inconsistent with further progress towards a sustained adjustment of the path of inflation. The message became clear. This has nothing to do with QE tapering, it is just a less for longer decision. The subsequent reaction in euro-dollar was to plunge after hitting resistance at 1.0875 and to break back below the 1.08 barrier. In the press conference following the decision, President Draghi repeated that the bank can expand or extend asset purchases if needed and pulled another ace from his sleeve. He announced that the ECB tends to purchase securities with yields below the deposit facility rate. This is a point where euro-dollar fell below the 1.07 hurdle. The rate continued its tumble throughout the rest of the day and fell below the support now turned into resistance level of 1.0630. With the ECB done for this year, all lights are now turned to the FOMC policy meeting next week. The committee is widely expected to hike rates for the second time in a decade, something also evident by Fed fund futures, which are currently pricing in a 95% chance of such a move. Given that the hike is almost fully priced in, we expect the focus to be on the updated dot plot, the new economic forecasts, and Chair Yellen's press conference after the meeting. Following the speculation of higher future inflation due to Trump's promises of fiscal spending, the market will be looking at how fast the Fed is willing to hike in the years to come. With the monetary divergence dynamic in place, we expect the euro-dollar to remain under selling interest and perhaps challenge once again the psychological barrier of 1.05 heading into that gathering. As for today's events, during the early European day, Norway's inflation slowed to 3.5% year-over-year from 3.7% the previous month, matching the forecast. Despite the slowdown, this is still considerably above the Norges Bank target of 2.5% and is still good news for policymakers who hold their monetary policy meeting next week. The nation's CPI data alongside the OPEC meeting outcome and the latest surge in oil prices may encourage the bank to remain sidelined for the months to come. From the UK, the trade balance for October is coming out and expectations are for the nation's deficit to have narrowed somewhat. In the US, the preliminary University of Michigan Consumer Sentiment Index for December is expected to continue rising. The preliminary 1-year and 5-year University of Michigan inflation expectations are coming out as well. We have only one speaker scheduled for today, ECB Executive Board member Benoit Guer. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.